Welcome back to Invest with Bell, your go-to source for smart, real-world real estate and investing insight. Big news today, the Bank of Canada just held interest rates steady at 2.75%. And whether you're buying, selling, or investing, this decision directly affects you. So in this video, we're going to break down what the Bank of Canada said and didn't say, what this means for mortgage rates and real estate trends, and what you should be doing right now as a buyer, seller, or investor. Let's dive in. On June 4th, 2025, the Bank of Canada announced it would hold its overnight lending rate at 2.75%. This comes as core inflation ticked up to 3.15%, even though the overall CPI fell to 1.7%, thanks largely to the recent elimination of the federal carbon tax. While Q1 economic growth came in at a moderate 2.2%, signs point to a much weaker Q2. With slowing consumer demand and high household debt, the bank is clearly walking a tightrope between inflation control and economic stability. And here's the key, they're leaving the door open for future rate cuts, but they want more confidence inflation will stay down. For buyers, this announcement means one big thing, stability, at least for now. Holding the rate at 2.75% means variable rate mortgages stay the same for the moment, and fixed rates are likely to stay near current levels, or possibly soften slightly depending on the bond market's reaction. If you're a buyer, this gives you a little more time to shop with confidence. If the bank cuts rates later this year, your mortgage affordability could improve. But waiting also risks increased competition and prices creeping back up. So the key question is, are you buying for price or buying for rate? That answer should guide your timing. Now for sellers, the news is a bit of a mixed bag. Rate holds don't drastically shift buyer behavior overnight. But with resale activity already down, this may mean the spring market stays soft unless rate cuts arrive soon. The good news? Buyers are still active, just more selective and value-driven. So if you're selling, it's crucial to price competitively, stage effectively, and work with an agent who knows how to market in a cautious buyer's market. For investors, the message is simple. Stay ready. The bank holding firm today, while signaling a possible cut later, means deals are coming, and so is competition. Lower rates later in the year could reignite investor demand, especially in rental and multifamily markets, but savvy investors are already watching for distressed opportunities or pre-rate cut undervalued properties. Run your numbers carefully, think long-term, and be strategic about leverage. The bank's next rate decision is just weeks away, and it'll depend heavily on how inflation trends, how the housing market responds, and how global economic pressures evolve. So if you're planning to make a move in 2025, timing, strategy, and preparation are everything. Thanks for watching Invest with Bell, your trusted space for smart, real-world real estate and investing insights. If today's video helped clarify what this rate hold means for you, make sure to give it a like, hit that subscribe button, and share it with someone who's planning their next move. Have questions about how this applies to your situation? Whether you're a buyer, seller, or investor, reach out to me directly. I'm here to help you navigate it all with confidence. And hey, don't forget to ring the bell, both here on YouTube and in real life, when you're ready to talk real estate with Bell. See you in the next video.